live. Okay, I've just let everything catch up. We'll get started in just 1 second. Check. All right. Thank you, John. Good to see you. Always nice to have a friendly in the room. Oh, come on. There's a lot of moving parts in this thing. Jeez. Holy moly. All right, let's get everything shared this time. Hello, one today is Thursday, January 30th, 2025, and this is the week and charts. Obviously, I thank all you guys and girls for attending. I appreciate you taking time out of your busy schedule to be here. So what we talk about? Well, obviously, current market conditions as usual. I have a lot to say about that. Your questions on trading, your favorite stock and crypto picks. If you have some that you're already thinking about, feel free to type them in now. We'll get to them when we get to the live charts, which will be in about maybe 30 minutes or so. I want to talk a lot about the methodology in action. It's been a few weeks. Quite a few things have happened over that period. Not a tremendous amount, but a few things. There's a mystery chart reveal, which actually wasn't a mystery chart, so I'll just show it to you. Textbook TKO. I have an update on using discretion. The TFM 10% update, I'm going to go over that really, really quickly because we spent a lot of time on that in prior sessions. And then in the last weekend charts, a couple of weeks ago, I did a live crypto trade, as I occasionally will do. We'll look it through the charts, and I'll talk a lot more about that in a second. But I do want to update you on that. And then also on the Landry 100, just to touch base on that, just briefly show you what I'm up to with that once again. Now, the main focus will be 25 trading resolutions for 2025, and we're now on part 2 of those. This disclaimer screen, as you know, you can lose money trading, or as I quite often sum it up, all predictions are about the future, and a lot of stuff can happen between now and then. All right, there's all my contact information once again. If you're watching the recording of this, obviously feel free to grab a screenshot and contact me. I answer everything eventually. All right, let's talk about the mystery charts and the methodology in action. Now, before we do that, I want to show you what a textbook TKO looks like. It's one of my favorite patterns, and this is from Trading Full Circle. And a textbook TKO is when you have a really nice wide range bar down, which is the TKO in and of itself, and then you have a poor close on that TKO. And when this happens, and the reason I call it a textbook TKO is because, one, it sticks out like a sore thumb as far as the pattern is concerned, and two, you could follow everything almost in a textbook kind of manner, meaning that entry goes above the high, stop goes below the low. And if you've been following the methodology, you know that the risk obviously is entry minus stop. But if you add the risk to the entry, that gives you the initial profit target. Now, the reason I say initial, to those who aren't familiar with the methodology, is we're not taking like a 2-to-1 or 3-to-1 or something like that. We're actually taking 1-to-1, but we're only taking half of our shares off, and we're letting the rest ride. And I'll show you, especially with that crypto example, how that worked out fairly nicely. And I believe I have a couple of more examples in here too of that. Anyway, so it's really cool, and I know I'm a nerd, but it's the methodology and the money management. It's kind of all rolled into one, because a lot of times it's like, where do I get in and where do I get out, and how do I do these other things? Well, this is all sort of done for you with this pattern. All you have to do, I know easier said than done, is get your trading psychology right and follow the plan. So we did have one that set up. Usually when I do these shows, I take the service picks and I'll put them in here as a mystery chart. But because we didn't do a show for a couple of weeks, this one actually triggered in the meantime. Anyway, there's the parameters down there. Now, one thing that you'll notice is my stop's a little bit further away. A couple of things I was thinking there. Number one, I want it to be a complete failure if I'm stopped out in this particular case. So I figured if it came all the way back in to the base plus some, then it would be a failure. And also, sometimes with these higher price stocks, and this is kind of to a lesser degree, but with these higher price stocks, sometimes I'll give them a little bit more room to get the share size down a little bit, because your margin can get really, really crazy. And that's kind of an interesting phenomena that happens with these higher price issues. And it's something I don't spend a lot of time thinking about or figuring out, other than occasionally in a case like this, maybe that stop goes a little looser provided the chart agrees with me, and that gets the share size down a little bit. Anyway, you can see it sold off especially hard. Now, the beauty of this, and you can go in and watch the archives, and I'll get the archives updated as quick as possible. The other thing I've been doing lately, and just a little housekeeping real quick, for my international clients, I've been asked, they've been on me for a while. They're like, Dave, can't understand your English. So can you put them on YouTube or get them translated somehow? And I did, thanks to one client. He explained to me that on YouTube they have some really good features, and I was surprised, even with my coon-ass English, it does translate fairly well. So I get those up to YouTube as a private video. Now, this is only going to work with a small number of clients, but right now I should have plenty enough room. So if anybody's international, let me know, and I'll be happy to add you to that YouTube list. It's a little cumbersome, but that's on me. I'll take care of that. Don't worry about that. But anyway, getting back to the textbook TKO, the beauty is if they trigger, because the market's got to come all the way back up from that poor close, right? So if they trigger, there's a chance you have a bona fide reversal underway. And if they don't trigger, then there's a chance that you miss the market top, okay? You miss buying a market top, I should say, and no capital gets put into harm's way, and you just scream next. I didn't think this one would trigger, but it did. So that shows the strength of this particular stock. Anyway, this was, I don't know if this was a mystery chart, but this was another one that got recommended recently. Yeah, it wasn't a mystery chart because it was in between the 2-week gap we had. But anyway, you can see it was in a really strong uptrend, and it made a nice pullback. And there's the parameters right there. You can get these old services or older services. Again, www.davelandry.com/archives, or the much newer ones. What's going to happen with those files that I put up there, those videos that I put up on YouTube for my international brethren, is I'll set a timer for those to come public or go public, however you want to look at that, once the setups likely have been triggered or not, or whatever the case may be. So in other words, I'm trying to say it'll be delayed, and that could be a few days or a few weeks depending on the setups. But anyway, there's all the parameters. The entry's here, stop is down here, and the initial profit target is up here. So let's take a look at what happened. You can see the stock absolutely imploded, but it never triggered. Now this is one, as I said, in the service on that particular day. I looked at it a dozen times to make sure it didn't trigger, because this chart doesn't really do it justice. When you're looking at the actual charts, the live charts, it looked like it came dangerously close to that entry, but it did not. So you want to wait for entries, and that in and of itself, as I preach ad nauseum, it amazes me how many times you'll stay out of trouble just by waiting for entries. In fact, I think that's one of my New Year's resolutions. Maybe that was last week's, but anyway, last week, or last show, I should say, 2 weeks ago, I talked about a stop, nick, and grab. This was one of the service that did technically hit the stop, but it only went a few cents beyond the stop. So I figured it was worth a shot of sticking with it. And following up on that, you could see that it did kind of meander down there right around that stop, just dropped a little bit below it, kind of based out, and then again, it was a stop nick. It didn't really blow through the stop. Now, this isn't a perfect one. Sometimes they'll go to exactly the penny, and then, people have asked me before, well, Dave, why didn't you set the stop 1 cent lower? It's like, well, nobody's that good, okay? And if you are, let me know. Some of these, I don't know what I clicked on, but lately I've been getting inundated with these YouTube ads. And if these people, if I was 1/10 as good as some of these people, I would, you never see my fat ass again. So it's, don't let that intimidate you like somebody's got the Holy Grail out there, because nobody does. And if they were that good, and like I often say, if I was that good, you'd never see my fat ass again. But if they were that good, they would be stupid diluting it down like they do. Anyway, so when I captured this yesterday, it was a $720 improvement, and that's on a hypothetical $100,000 account. But I do take these trades in more than one account. So in this particular case, it was a $720 improvement for me. Now, this stock did back up today, unfortunately. So still a little bit of improvement, not quite 720. But you can see sometimes you could use a little discretion and ride out a stop nick. And longer term, using discretion will pay off. Over the short term, you possibly run into a couple things, which we'll get into in a second. But one could be that obviously you end up losing more than you intended on losing. Now, I'm not throwing caution to the wind and saying, okay, it stopped out, but I'm not going to take the stop. What I'm doing is attempting to improve the performance and or mitigate the damages. Now, it does take discipline to exercise any type of discretion. And one of the problems is stop creep. So you'll notice that it kind of went barely past that stop, and I said, well, I'm gonna stick with it, and I'll put my stop in below the lows, or if it takes out the lows, I'll get out. And then like the next day, it kind of went barely below that level a little bit. And you got to be careful, because before you know it, it can kind of open up a little bit, and sometimes then it'll begin to accelerate lower. You'll come in and there's a gap down or something. So I'm cognizant of that. I know I kind of let it have a little stop creep on that. You got to be really, really careful. Anyway, something bad can always happen. So let's say you apply a little discretion. Let's say it went to the penny, and you're like, okay, well, Big Dave says when it goes to the penny like this, stick with it, because it might have just been a little spike, and maybe it's nothing to worry about. But be prepared, and trading like life is making decisions. Every decision you make is going to have an emotion attached, as I talked about with the neurology, and it's also going to have obviously a consequence, and that consequence is why you have that emotion. As I've said 1,000 times, borrowing from Denise Shaw, people who are asked, who don't have that emotional part of their brain that allows them to make decisions, if they're asked, okay, do you want to meet again next Tuesday or Wednesday for a doctor's appointment, they'll talk about Tuesday, they talk about Wednesday, but neither one has a significant emotional consequence over the other. So they'll go back and forth, and they'll reach a stalemate, or they'll never be able to make a decision. So you have to be cognizant that you're adding one more layer of complexity on. I don't recommend you do this if you're brand new to trading. I recommend you trade something like my service a little bit more mechanically when getting started before adding in discretion. Anyway, I know I've said this 1,000 times, but obviously when you add that extra decision, more stress, more consequences from that potential new decision. And then also, again, something bad can always happen. Now, if you do make a lot of these decisions, too many decisions, I should say, that can lead to sloppy trading. I kind of gave you a little example of that, of the stop creep. So it's like, okay, well, it stopped me out, and I'll let it go a little further, a little further, a little further, a little further. It becomes a Chinese water torture, and then, bam, the market accelerates lower, and then you're in a lot of trouble, and you risk way more than you ever did intend. Okay, a couple of weeks ago, I took this ONYX coin in the weekly charts. I was doing the crypto analysis, and I'm like, that looks pretty good. I think I'll buy it. And this is part of my shitcoin to Bitcoin strategy. As I've said quite often, years ago, of course, the nerd that I am, I looked into Bitcoin mining, and you could actually buy these miners pretty cheap. Last time I checked, it was like $250. You can actually get a miner off of eBay, but if you plugged it in, even with the relatively low electricity costs, it would lose about $10 a day, and that's why it's so cheap. People are just unloading these things. I think it'd be a horrible business to get into, but my thinking is if I could take these shitcoins and make a little money here and there and take a little crumb off and stick it in Bitcoin, I'm kind of creating something from nothing. Now, you can argue that Bitcoin is nothing, but like I said this morning, now that it's over 100K, I think people are starting to believe that it's actually something. Who's that guy? Peter Schiff's always poo-pooing it. There's a lot of people. I'm not going to say his name, but there's one person that poo-pooed. I don't talk about him that much anymore, but he poo-pooed it from like I think it was like 2,000 to 3,000 to 4,000 to 10,000, 15,000, and I haven't heard him talk about it lately. But anyway, what I do is when it hits that initial profit target. Now I'll show you this in just one second, but with the shitcoins, what I do, because they move so fast, is I'm just using a 20% initial profit target on everything across the board. And as I said before, in reality, I probably should be doing a lot of the things that I'm doing in stocks, like looking at the historical volatility, looking at the recent range, and some people like to use average true range. And yes, if you boil all down what I do, a lot of times my stops do look a lot like an average true range type of stop. But anyway, just to make the math easy, and this is kind of nickel and dime stuff that I'm doing with these shitcoins. And by the way, don't risk your life savings in these. Put a few thousand in them, play around with it, have a good time. If you're new to trading, believe it or not, and I know it sounds crazy, but these are actually a good thing to trade because they are tradable, they're fairly liquid, and you can get the reps in. And there's a bull market that comes along every 3 or 4 weeks. You just have to learn how to sit on your hands in between, just like any other trading. But this would be a good way to get the reps in. I saw something a couple of days ago. I saw interesting, and I forget the name of the book. It's something art, and I'll look it up tomorrow and get the name to you. And the Amazon reviews were kind of mixed on it, so I didn't grab the book, but I did like the one little idea or concept from the book. And usually me, if I like one little thing from a book, I'll just go ahead and buy the book. But anyway, long story endless, there was this experiment where they had, I forget the number, like 80 students or whatever, and they divided the class in half. I think the number was 77. I'm not sure how to divide 77 in half. But anyway, let's just say 80, 40 people over here and 40 people over there. And it was an art project. And they wanted the 40 people over here to make the most beautiful piece of pottery they could. So these 40 people got together to make one piece of pottery. And then the people on the other team, their job was to make as many pots as they could, many clay pots as they could in the time allowed. And what they found out was the people who made the most amount of pots actually ended up making the most beautiful pot because they honed their skills by making all these pots, by focusing on the quantity of them versus trying to get it just absolutely perfect. Now, Dave, I thought you said be selective. Yeah, you want to be selective, but my point is that with the shit coins, you've got enough turnover and enough bull bear cycles to where you can get the reps in and even do the right thing in trading these things. So just kind of an FYI, if you're new to trading, that's something I would encourage you to look into. Anyway, those were the trades there. So the entry was here, and my IPT was there, 20% again. And when it hits that level, I take out a crumb, in this case, just $25 at the initial profit target. And then I put that over into Bitcoin. Now, someday when that Bitcoin actually becomes something substantial, because I'm just hodling that, HODL, hold on for dear life. I'm just hodling that. But someday when that becomes substantial, I'll have to put a little money management in it. But this way, for now at least, I thought it'd be fun to do this. Now, initially, if you watch some of my older presentations, what I did was I'd keep a little bit of the profits in the native currency. So this ONYX or whatever the hell it is, I would put that $25 in ONYX, and I actually was doing a lot more than that, like 50 or so. But anyway, and that failed miserably. Now, my thinking was that, okay, well, if one of these coins becomes like a Bitcoin someday, a Bitcoin, I sound like the old people, like Bitcoin someday, which it probably won't, then I'll have that money in that base currency. So it's kind of like what was the pizza? 10,000 Bitcoins for one pizza or something like that. So it'd be kind of like owning 10,000 of one of these. In a case like this, it might even be more than 10,000. But that ended up failing miserably. So I thought the next step would be just to put it into Bitcoin, should Bitcoin become viable over time. And I wish I'd done this originally, hindsight, right? Originally, because that Bitcoin would have been worth a lot more. Anyway, so when it hit 100%, and sometimes I'll put limit orders in at 100%, I think that in this particular case, I'm like, holy moly, it went up more than 100%. So I mined, so to speak, another $25 there. And then it went up like even more. And there's the trades there. And okay, so I mined at 100% plus. And then at one point, it was at 750%. I know, it's crazy, huh? Hard to believe. This doesn't happen every day, believe me. Another one of those, if it did, you'd never see my fat ass again type of things. But anyway, so I was like, holy moly, this thing's up 750%. I'd be stupid not to take a little bit off. So I took another $100 off and stuck it into Bitcoin. Now, I did get stopped out right about that level there. And let's see how we did. So there's all the trades on the left. And remember, the initial investment was only $1,000 and took partial profit. So that puts $496 back into the account. 25 was mined, another 25 was mined, $100 was mined, and then it stopped out and 23.78 came back to the account. So overall, it ended up with about a $2,000 gain, okay? And that's 100% return, obviously. I think the math's right on that, 100% return. So better than poke in the eye on that. Now, it was up substantially, like I said a minute ago, when it was up 750%. So it was up to 4,954. That's what the position was worth, okay? And that's after a lot of that profit taken, right? And it stopped out at 23.88. Now, that seems like a lot to give up. And in hindsight, I guess it was. Maybe I should have scaled out a little bit more because you don't get that 750% gift horse all the time. But what I was trying to do, as I'll show you in 1 second, was ride out that first deep correction. And that'll make sense in just 1 second. So anyway, while doing all this analysis and everything on the trades, I said, you know what? It's starting to look kind of interesting again. So I went back in, and once again with $1,000. So the entry was right there as it began to rally out of that pullback. And then the IPT was 20%. And once again, I mined another $25 at the IPT to Bitcoin. Now, should it go up 100%? So I got in about 3 cents. Should it go to 6 cents, then I'll pull off even more at 100%. But look where we got in this thing at a half, right around a half of a cent. And then it ran up to 4 cents. So that's a pretty decent run. Again, 800%, 750 or so. But here's another mining transaction right there, so to speak. So we'll see how it works in a few years from now. It's could work out really nicely, or not. Now, as I said a second ago, you want to try when you get in these wonderful parabolic moves, you know you're going to get whacked, okay? And we talked a little bit about this in the Facebook group. Like if you're in a stock and you know you're going to get whacked, sometimes what you can do is you could just sell when it's just going straight parabolic and fritter away some of the money because you know it's going to retrace on you any moment on some crazy, wild, out of the money options. Now, they're probably going to expire worthless. The implieds are probably through the roof. I know all these things, but you're also going to get hit with a substantial 5 points, 10 points, depending on the price of stock, obviously. But you know you're going to get hit with a huge gain. So sometimes you can do something like that. But the ultimate goal would be to try to ride out that first correction without throwing caution to the wind. And believe me, it's a painful thing to do. All right. Any questions on any of that? Nick says, Dave, as the trend develops, could you manage this trade with longer term moving average, say the 200 SMA? Oh, absolutely. Absolutely. Good point, Nick. So what happens is over time, my trailing stop, at first it's kind of ratcheted higher like this. And then it's kind of like, okay, well, the market goes up a little bit. I call that keep the change. Let's say it goes up 30 cents on a $50 stock. Well, I'll just say, just leave it there. Let's not move it. So the stock goes up, the width of the stop goes up 30 cents, okay? And then I'll keep doing that with the keep the change. And then sometimes, let's say a market goes up 3 points, I might only bump the stop 2 points. And now I've opened up another dollar on that stop, and I'm letting it widen out over time. Now, over a long period of time, my stop will start looking like a longer term moving average. In fact, one thing you might want to experiment with, and something I did years ago, which is kind of another one of those things that's kind of fun, is you keep increasing your size of the moving average as the position was more and more in your favor, giving it more and more room. The only problem that I can see off the top of my head, other than obviously you're going to get whacked eventually, and the same thing happens with my trailing stop. But the only thing is the moving average, when you add in higher prices and you're taking off lower prices, so you're looking back 200 days and the market's way down here, and you're looking at the current price and it's much higher than this price, even though the stock has been, let's say, dropping over the last couple of weeks, that moving average is going to continue to climb higher, whereas my stop would not be there. But yeah, to your point, Nick, and when we get to live charts, we'll pull it up and see. But on this trade, I was really hoping that I could ride it all the way down to the 30, but that was just way too far to go. But good point on that, Nick. Thanks for the question. Okay, speaking of longer term trend trading and longer term moving average, that's exactly what we're doing with the TFM 10% system. The sell is 10% below the 50-week closing high and a close below the 50-week moving average. So we are using that 50-week moving average in conjunction with the 10% line. But anyway, I'm not going to spend a lot of time on this, I promise, this week. These zones are just based on the 50-week closing high. And the sell is just when it closes below the moving average, the 50-week simple moving average. I used a simple moving average. I said I wanted to talk about it, and here we go. I used a simple moving average because I actually wanted a little lag built into the system because it is a bit of a longer term trend following system. That's kind of the idea. It's to not get caught up in a lot of whipsaws, see the forest for the trees when it comes to the markets. And by the way, with all the gyrations we've been having lately in the market, it feels kind of ugly out there, right? And of course, when you look internally, it is a little ugly here and there. But if you look at the weekly chart, notice that we're just off of these all-time highs, which is also the 50-week highs. Anyway, you go to my YouTube channel, you can find a lot more on this, or my website, of course, davelandry.com. That was the last sell signal way back in the last, that was 2023. 2023 in late October, I think, was the last sell signal. And it's been long ever since. 2 bars of Landry light. Again, and you go long on the close of the week. And the sell again, it's going to close. Now in this case, the 10% line is here. And my thinking is if a market drops 10% or more, it's in trouble and you might want to think about getting out of the way. The market being an index, okay? An individual stock, some of the wild and crazy stocks we trade, they go up and down 10% in one day. But the overall market, 10% is substantial. So it closed below the moving average and it closed below 10%. So now you can see when the moving average is below the 10% line, it would have to close below the moving average. When the moving average is above the 10% line, then once it gets below 10%, that would be your sell signal. So hopefully that made sense. Let me fix this screen over here. Sometimes this computer's hard to wake up over there with the YouTube. Okay, the market creeps lower after I've moved my stop. Wow, that's never happened to me. Anyway, just real quick, way back in April of 2023, for S&Gs, I'm like, you know what? I'm going to buy 100 shares of the Qs. I did a quick back test. I saw the signal, and I did a quick back test. And it said, you know, it's actually looks like it's working pretty good in the Qs. So I said, what the heck? I'll give it a shot. And to my surprise, it's had a really, really good run. In fact, it did not. The P's stopped out somewhere around here, remember, in 2023? Because the P's went 10% below the 50-week closing high. But notice that it didn't get below the 10% line, and also it didn't get below the 50 simple moving average. So now the stop would be way up here, and that's a bit of an ouch. Okay, so that's from where we are. It's 25 round number. That's 50 points. So that'd be a $5,000 drawdown. But I've showed in shows before. I think this drawdown here was $8,000. Now, when I got in it, as I said 1,000 times, for S&Gs, I'm like, it's 100 shares. Who cares? But now it's turned into actual money. So again, the exit would be right there. You can see the moving average again is still below that 10% line. So it's got to close below the moving average. Okay. Whereas once the moving average gets above it, then the 10% line is your signal. But either way, it's got to close below both. But the point is that the moving average will catch up to price. And then when that starts catching up to price and it gets above the zone, you exit then. And by the way, I said I wouldn't talk a lot about it, but here I go. Jeff, who might be here tonight, told me that he likes to get out at a 5% loss or when it's in the 5% zone. So that inspired me, or was the inspiration, I should say, to put these extra zones in here. If you're looking at the ACP stock charts platform, then this is built in. The zones aren't built in. You would just see a line at this 10%. But I can share this chart with you if you like. I'll share it in the Facebook group tomorrow if anybody's interested, and it'll automatically plot it on your ACP chart. But anyway, I got it in 319.49. I just did a mark to market earlier today at 523.58. So that's a 204-point gain. I never dreamed that that trade would go 64%. So you do all the math on that. That's a $20,000 gain, and it's going to be one hell of an ouch when it comes down and hits that stop. But it'll still be better than the poke in the eye. Should end up with a fairly decent trade over that period of time. By the way, I don't have any longer-term stocks that we've held because we hadn't held any in a while, but I could have gone in and get some from a while back. But the point I want to make is, in a few minutes, I'm going to talk about ignoring the news. And when you have a chart like this is the weekly chart, okay, that we've been long, or I've been long since way back in April of 23. I wonder if did anybody else take this trade with me? If you did, that's awesome and that's exciting. But anyway, the point I was going to make is that over that period of time, there were wars, I don't think there were pandemics. It probably was some scares here. I know there was avian flu. Is that what it's called? Anyway, there was a lot of stuff that happened, and this is why if you want to make any money longer term, you'll have to ignore the news and just let everything unfold. All right, Landry 100 proof of concept. again, proof of concept. I'm just trying to prove that momentum begets momentum. And I wouldn't recommend doing this on your own. I tried a little bit of this stuff and it kind of failed miserably. But I think if you had 100 stocks and you were just buying brand new highs, you would do okay. And these are 52-week highs. I'm buying on the 52-week highs. As I've said before, there have been times in the past when I was running this portfolio, so to speak. I'm doing air quotes because it's not real money. Again, I have experimented with it a little bit. But when I was running the actual Landry 100 years ago, there were times in the market where I couldn't find anything at 52-week highs that was interesting, so I had to drop that down to lower and lower highs to find stocks. But right now, and for a while, I've been able to find plenty of stocks to fill this list. But anyway, we are buying, so to speak, there's those air quotes again, at brand new highs. And again, I wouldn't recommend doing this on an individual basis. When the altcoins, well, shitcoins, I already said it. When they are moving, you could just buy the ones that are making new highs. If we ever get back to a 1999 and stocks, then by all means, you could probably just go out and buy the new highs. Anyway, so that's where it was bought. And you can see it didn't do much initially. It just kind of went sideways for quite some time. And then it began to gain a little footing. And so it's a 234% gain. This app, it's been in since 9/11. This experiment started end of May 24 for those keeping score. And so we've got a few triple digit gains in here. Now, one thing that there's no money management involved in this. One thing I'm doing with my experiment is if something goes up 100%, I'm taking off half. In this particular portfolio, I probably should be taking off half at 100% because you would have 100% outright position, or a free, so to speak, outright position. So the way I'm running this, and I know I'm doing a lot of air quotes tonight, I'm going to be embarrassed when I do my editing tomorrow. But the way I'm running it, so to speak, is $10,000 goes into each stock, and it's a hypothetical $1 million portfolio. So this one's up, let's just say 200% round numbers. So that position is worth $20,000, which is 10,000 more, or over 100 or 100% more than the initial investment, so to speak. There goes those air quotes again. So the question is, well, that's the top of the list, okay? Go back and look at it for 1 second. So again, top of the list, you got triple digit gains and 20% gains and 30 and 40 and 50 and 60 and 80 and 90% gains. Well, what's the bottom of the list look like? Well, the bottom of the list, to my surprise, is not that bad. But keep in mind that I'm doing a constant kind of window dressing, so to speak. I'm putting in better stocks constantly, and I'm pulling out bad stocks, okay, constantly, okay? So it's a constant window dressing, and I did a whole presentation just on that. So go in and watch that if you have some time. It's on my YouTube channel. It's probably on the quick clips, I think. But there's a lot of playlists I've been working really hard to parse this out into really nice little, easy to digest little bits. So check those playlists out, and like and subscribe while you're there if you don't mind. And if you don't like them, go have no fun somewhere else. But anyway, so to my surprise, there's only about 20 of them here. So 80% of the list is actually in the black, which is kind of shocking to me given all the zigs and zags of the markets. But I do take a lot of stocks out of this list, and occasionally a big winner will come out too, and that's what makes it all worthwhile. So again, with the proof of concept, momentum begets momentum. You want to kick out the losers, okay, and hang on to the winners. You want to run a portfolio like you would manage your employees. You've got 3 employees, 2 are busting their ass and 1 sitting on his or hers. You want to get rid of that person, right? Don't keep that person thinking that tomorrow they come in and they might start working again, okay? So anyway, it kind of proves all this concept, trend following, and it also gets whacked pretty hard too, okay? Trend following often ends badly, or in fact, trend trading in the end ends badly, okay? Because you're going to be giving up some of those gains. Like I said a minute ago, that Q position at one point gave up $8,000. Now it didn't stop out, it's still in it, but if it stops out now, you're going to give up $5,000, okay? All right, any questions on all that? Let me catch up on everything here. All right, we're good here, we're good here. All right, I think we're up to speed. Okay, last week, I went back about 4 years and I found some of my Trading Simplified shows that I did. I was shocked. I did that. I wasn't aware that I did that show for over 2 years over at stockcharts.com. But anyway, I went in and found some of the resolution shows that I did on trading resolutions, and I've been updating those. And last week we covered the first five, or 2 weeks ago, first five. And again, check the playlist on YouTube. I think these are in the quick clips. All right, number 6, I will do my homework, leaving no stone unturned. And as I think I'll say in 1 second, this is especially true in poor market conditions. There's been many days, many days, if you're on the service, like somebody was saying a while back, geez, Dave, 5 setups in 6 months, I'm not too impressed. Well, I think 4 out of 5 worked out fairly nicely. So I was impressed with myself over that period. And there was also a lot of other setups that did trigger. So I feel like I need to get credit for some of that, right? Because no capital was put into harm's way. But anyway, the point I'm trying to make is you definitely need to do your homework even in crappy conditions, because you never know when your next big winners are going to come along. And if I didn't have this education business, which is forcing me, I know myself because I could be a little lazy at times, this is forcing me to do all this work, okay? If I didn't have the education business, maybe when conditions are choppy, I just go home and say, screw it. There's not going to be any setups anyway. And I know I kind of beat the dead horse on this, but there's been more than one occasion. I don't want to pick on one person because he's going to think it's him, but there's been more than one occasion where people are like, Dave, I'm going to take a break from this trading thing, and I'll stay in your service. Don't worry about that, because I can see the value longer term, but I just don't see any setups for a while, so I'm going to just go take a vacation or whatever. And then, of course, usually when I get that email, the next day I'll have a couple of big setups, and it'll make the whole year. So anyway, leaving no stone unturned means that I'm looking at roughly 2,000 charts a day, and I have very loose parameter scans, which I actually give away for Telechart, and you could modify them for other packages. In fact, the Telechart programming language isn't robust, but the program is quick and dirty, and I mean that as a compliment, because I could just bang through these charts and it could run those formulas really fast, and I could bang through the charts. I remember back in the day, I'm not going to say which program it was, but back in the day, and it was computer technology too, but back in the day, it would take 45 minutes to run the scans that I had to run. And I was helping someone, I was ghostwriting a stock picking service, whatever, but that's a 2-drink minimum story. But while the scans ran, instead of twiddling my thumbs, what I would do the first thing after the market closed was I'd make a copy of the database. And back then the data was, you could copy the data over, which was really, really nice. And I had a little program that you could have it display charts, but you'd have to program in what do you want to see. Like, okay, I want to see a moving average, I want to see this or whatever else, and then go. But it could only go forward. So while the scans were taking 45 minutes to run, I would just sit there like the rat going for the cocaine, hit that space bar, bam, 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 bam. I got faster and faster at it. So just by complete accident, because the computers were slow and the software was slow way back in the day, 25 years ago, maybe longer, shit. But I would just sit there looking at charts, and that's how I got good looking at charts. Once again, it's kind of the repetition thing I alluded to, getting the reps in, okay? But anyway, that's how that started, and I would look at the entire tradable universe. But anyway, so those loose parameter scans are just showing me recent new highs, not a new high today. I actually do those new highs today with the Landry 100 now, but this loose parameter scan is just showing me the recent highs. I also look at IPOs, okay? I look at the most recent IPOs and I sort them by volume, and I also look at a little bit longer term IPOs or what I call toddlers, those that might be now 2 or 3 years, and that's all in my IPO database. And I call them out if they go down to penny stocks or if they're so thick that I'd see them in my other scans and all. But it's IPOs, dollar, gold. I look at some of these commodity ETFs, and I find it kind of interesting. I think it's DBA, which is the agricultural commodities, which are now banging out some new highs. So I think that's a little inflationary. I don't want to try to put too many intermarket technical analysis pieces together, because intermarket technical analysis only works when it works, but there are times where it pays to pay attention. So that's why I'm looking at all these things like gold and dollar, and of course Bitcoin. And then I've got a lot of ETFs. And one of my clients asked me a couple of years ago if I could shift more to ETFs versus the media general groups. So I've done a lot of that. I spend a lot of time daily talking about the individual ETFs in the service. And again, you can get the archives, dailylearner.com/archives, or if you subscribe to my YouTube channel, you can start getting the delayed archives there for free. But anyway, lots and lots and lots and lots of charts. And I put this in at the last minute. This is especially true doing less than ideal conditions. And it's a lot harder to do the analysis when there's nothing there or perceived nothing there, because you got to look really hard to make sure you're not missing anything. The good news, though, in good conditions is that the best setups tend to jump out at you. And there's been many a days where I'm a few minutes into my analysis and I'm like, okay, I've got my stocks that I want to trade tomorrow, or stocks, whatever the case may be. That best setup just will kind of jump out at me, and then I'll just go through all the charts to make sure it's done. Now, in crappy conditions, I just keep going through charts, till I feel like I'm almost exhausted, and I know that I've exhausted all possibilities. But the good news is, in good conditions, you don't have to try that hard. But anyway, I thought it was this would be a good example, and there are others, but this would be a good example. This little trade that I made a couple of weeks ago during the show, I haven't been doing a lot of the shitcoin analysis because the market was kind of going through that bear market crappy phase. And during the show, I'm like, holy moly, that looks pretty good. I think I'll take the trade. I did take another trade during the show, and I stopped out of that one. It was just a small amount investment, small amount total on that, because you could only trade that one particular pair in an account where I just had like a tiny bit of account size. So I got lucky on that one. But this was the one that I really liked and got excited about. And so I could easily have missed that. So thank you guys for attending and being in the show and helping me look at that. Number 7, I only trade the charts and ignore all other extraneous information. I often say, read my lips. Our ultimate goal, again, is not just a little poke in the eye trade, which I'll show you in 1 second. Our ultimate goal is to get on a trend and ride it forever. People, again, I know I'm beating a dead horse a little bit tonight, but people are like, Dave, what's your holding period? I'm like, well, 10 years, hopefully much longer. So just look at the charts, and I'm asked that all the time. It's like, read my lips. I ignore everything. Now, if you want to pay attention to that stuff, that's fine. But longer term, it's going to get you into a lot of trouble. Believe me. One of my favorite things to say is, don't confuse the issue with facts. And number 8 is, I will place a protective stop after a trade triggers. Now, and the reason you want to place that stop is no one knows exactly what a market will do. Not you, not me, and not the guy who screams on TV. And certainly not all these YouTube gurus. And well, that's the other thing I was thinking about, not to go off on a tangent, right? Or pick a fight. But I was just thinking earlier, I haven't looked into it, but that YouTube advertisement, that has to cost thousands and thousands. And I've heard before that some of these guys out there are spending millions on this YouTube advertisement. It just seems like, I don't know, it seems like a lot to spend. Anyway, I wonder who that is. They have an inverse account for him on Twitter and or X now. I would recommend you follow it because it does really well. All right, number 9, I will take partial profits when offered. So this is a little generic pullback screen. Okay, so it's a pullback, there's an entry, there's a stop. and there's an initial profit target. And a lot of times the market goes up, hits that IPT, comes right back in. As I've said 1,000 times, in choppy markets, when that happens over and over and over again, people are like, Dave, why don't we take 100% at the profit target? It's like, well, because we want to try to catch a longer term trend on occasion. And then when the market just goes and goes and goes, people are just the opposite. Like, Dave, why are we taking partial profits? Because we'd have made so much more money if we just stayed at 100%. Well, you never know what's going to happen. But anyway, this is the what I call the better than a poke in the eye trade. All right, number 10. I will not take any unnecessary action, thereby micromanaging myself out of trades. There's a lot of things that can cause you to micromanage your trade. What's going on in your home, the extraneous, and boy, I beat the dead horse so much on the extraneous influences, but I tell you, we're very much influenced by things that have nothing to do with trading. It's like my house is all one now. I had a separate structure before. I had a guest house I worked out of. Now I have a separate office built on where it's you have to go in and out of the house or in and out of my office, however you want to look at it. But it's connected to the house. But it's like, it seems like every time I go in the house, it's kind of like, hey, taxes are due. Hey, we've got a problem with this or whatever. You know? So it's always something that's influencing or potentially influencing my trade. And you really have to be cognizant of that. Dead money, for instance, let's say your stock goes up and then it flatlines for a while. I mean, you can go in and look at that one that's up 200-something% in the Landry 100. And like I showed a few minutes ago, it triggered and then it flatlined forever. We've had plenty of stocks trigger, flatline, and then take off a month from now. And a lot of people give up during that quote unquote dead money phase. And I do a lot of that too. Trying to outsmart the market, trying to pick the top. Scale out a little bit if you're up 750% on a shitcoin, but your real money is going to be made in a longer term trend. Now I had 100,000 of that little coin, whatever that crap coin was. And of course, I fantasize a little bit. Oh, $1 is $100,000. So it's like it's fun to do that, but it could happen, okay? And it didn't happen on that one. Maybe it'll happen on the second loaf that I just did. But don't try to outsmart the market. That's how I became known as a trend following moron. All right, let's shift gears and hop into crypto. If there's any questions that you guys have, feel free to let me know. Let me know if there's any individual crypto pairs you want me to take a look at while I get this set up. Okay. See if I can clean this up. Okay. All right, we're gonna do this. Okay. Let's take a look at the XCN. So yeah, you can see this was my add-on trade or add-back trade. Everyone look at new trade. I got in here, took half here, and so far it's come back in. So if it comes back to break even, then I'm going to have to get out of that one. This Ripple, I've been in forever. As I said before, I've never made any money to speak of in Ripple until now. And I think, if memory serves, this kid from the gym wanted to learn how to trade, and I think you just want to learn how to get rich quick, which, yeah, so do I. But I was teaching him just to buy stuff that goes up. And he's like, well, why are you buying that? It's like, because it's going up. And a lot of people have a hard time wrapping their head around that. For me, it's pretty easy in these shit coins. It's like, well, they're going up, buy them. If they don't go up, don't buy them. But anyway, that was the entry. That was initial profit target. And you can see dead money for quite some time, right? And then it took off, and now it's dead money again, so to speak. I think this was 100% here, if memory serves. So that was, I think that was another mining type experiment there. But it was just like a crumb that came off. Let's take a look at Bitcoin. I think Bitcoin's getting closer and closer to going. I think it's, as I was saying earlier to my peeps in Facebook, I think the early adopters are looking at their millions and millions and millions and millions of dollars, and they're selling into this 100K Bitcoin. And I think that once some of that supply gets exhausted and we get a decent breakout, then the FOMO is going to kick in because people have kicked themselves in the ass. It's like I see these memes on the internet all the time that they don't mean anything to me because that's just how it is. It's kind of like, Bitcoin 100K, everybody's lining up at the window. Bitcoin 50K, nobody's lining up. Well, the thing is, if you are a trend trader, you're going to be buying higher and higher and higher. So that actually makes sense to me to buy that market when it's high. By the way, I think I've said this before. I remember when I bought Bitcoin at 18,000, and I thought I was the stupidest guy in Stupid Town. I'm like, I can't believe I'm spending $18,000 per coin on this imaginary thing, and looks like it's slowly becoming viable. Maybe Michael Saylor is right. As he says, volatility is the price you pay for performance. All right, so let me just show you real quick. When these things are running, as I've said 1,000 times, sort them by the strongest, and then just start looking at the strong. Like I probably wouldn't buy that one, or I won't buy that one because that's kind of bottom fishing. But if they're banging out some new highs with a little bit of vigor, and doesn't look like a lot's happening tonight. So that one kind of looks okay, but judging from the tails, it looks like it's probably thin. But you kind of have a little bit of a cup and handle there. It's not perfect. By the way, as I often say, never buy anything, never say never, but as a general rule, don't buy anything below the 30 EMA. That'll keep you out of a lot of trouble. And again, I'm just looking at the strongest ones. I'm not seeing anything tonight just yet. Any individual crypto you guys want to take a look at? We'll shift gears here really quick, and we'll get into stocks. Yeah, it's not a whole lot happening. Let's just take a look at how did the gap happen here? I guess this is really thin. This is one I'm actually in. I think the IPT is like 222 or something on that. Let's take a look at Ethereum. Where's my Ethereum? Ethereum to Bitcoin is this is Ethereum Bitcoin, so you could see and use there's your best friend right there, 30 EMA. You don't want to be buying Ethereum while the Ethereum Bitcoin is below that 30 EMA. And look at that, that was up at 03 and change, and now it's way down here. And as I've said quite a bit, when you look at some of these shit coins, you'll see them drop 50% or 80% or 90%. And they'll never get above that 30 EMA. So that one little thing in and of itself can keep you out of a lot of trouble. All right, I'm gonna shift gears and go over to stocks. So let me get that loaded up. Talk amongst yourselves. All right, so I'm gonna change over to stocks. All right, let's take a look at the Ps. S&P 500. Type in your stock symbols now. So at the end of the show, I'm not begging for them. If there's anything you want me to look at. Oh, by the way, the Landry 100. I do share it to my Facebook group and occasionally put it out on apps. If you do have Telechart, you click right here. Once I share it, you can click right here after you click on it and log into your account, and the watch list will magically appear there. S&P 500 kind of was all over the place a bit today, but it did manage to close on a high note, or a fairly high note, or close in the plus column at least by 0.5%. And we're not too far away from all-time highs, and that's why I like occasionally look at those weekly charts, especially with the TFM 10% system, to see where we are. So S&P, little sideways, okay? Draw your sideways lines. You can go all the way back to where December, okay? Early December. So about 2 months of sideways trading, because it'll be February soon, right? Nasdaq Composite doesn't look quite as good as a P's, and it does look a lot more sideways, okay? But it's back above the 50 simple moving average at least, and the bow tie moving averages are, yes, they're back into proper uptrend order. So that's a good thing. 10 is greater than 20, and 20 is greater than 30. The 10 is simple, and the 20 and 30 are exponential. The 50, which I like to use as a reference with these other moving averages, is a simple moving average in this case. Let's take a look at the Rusty 2000 has rallied up to the 50 simple. The 50 only matters when it matters, okay, when it comes to markets. And so if the market gets iffy, I'm definitely looking at that 50 simple. And then to some extent, the 200-day moving average too. But anyway, kind of stalling out a tiny bit right at that 50 simple moving average. Still looks toppy longer term. It's kind of all over the place. So I wish this guy would wake up at some point in time. Did I just say point in time? Sound like button. What's wrong with people? Like button, literally. It's just like literally drives my wife crazy. It's a short trip. Who said that? Anyway, cybersecurity, look at that, all-time high, so that's a good thing, all right? Sky computing has been doing pretty good. It's now below those all-time highs, but it's gaining a little traction. Longer-term uptrend still intact there. Robots is kind of a crazy sector. I guess it got whacked with that AI thing, and here I'm going to confuse the issue with facts, but again, I'm speaking out of both sides of my mouth, but I do think we're going to probably end up with a do-over from that AI deal, because they're like, we have the best AI in the world. Our website doesn't work, but we have the best AI in the world. Well, you can't make a website work. Is your AI really that great? I mean, I don't know. I'm confusing the issue with facts, but anyway, internet all-time high, so that's a good thing, all right? Gold waking up. Look at that. At least basis is ETF. It's all-time highs. I don't know if it's all-time highs in spot. Does anybody know off the top of the head? I don't pay much attention to spot and futures anymore, but I guess I could and should. Anyway, gold starting to catch a bid. Okay, look at the bow tie proper order. It's I like when the bow ties go through that 50 at a sharp angle. That's one reason I like to have them in there as an inflection point. But gold stocks are now beginning to wake up. They're kind of all over the place, but on an individual issue basis, I am starting to see some that could set up fairly soon. So that's kind of interesting. I'm glad to see more and more in some actually new areas, either bottoming out or beginning to bang out new highs. Just broker dealer, brand new highs. Financials have been pretty good too. Look at that, all-time highs in financials. I'd like to see them keep on keeping on, but they're doing fairly well nonetheless. Leisure is another one of those areas, banging out some new highs if I can find it. There it is. Look at that. Okay, so maybe we'll see some setups there on pullbacks. Biotechnology, basis the IBB at least, is bottoming out. It's beginning to bow tie up. I'm not crazy. I was telling my peeps earlier about a bow tie at high levels. At mid levels like this. I'm more concerned about a bow tie like this one here, coming off of all-time highs to the downside, or major lows for the upside. But it is a bit of a momentum signal nonetheless. A lot of overhead supply. The point I'm making, though, is we're getting above the moving averages. Moving averages are crossing over, so it's definitely improving. Software has been a bit of a bummer. It's kind of stalled out a little bit to stalled short of its prior highs, he tried to say. So that's a little bit of a bummer, stalling out in that retrace rally. Health care providers has been abysmal forever, but now it's beginning to improve. I wouldn't rush out and buy them. It's kind of like biotech, but it's improving nonetheless. Medical devices doing really well. Take a look at those guys. Brand new highs there, off their best levels today, but hey, new highs is new highs, right? Defense has kind of been crazy, but it's going straight up as of late. It's pulled back a little bit. Kind of has a little bit of a high level cup and handle. Not a huge fan of that pattern, but it looks okay. So maybe there's some setups that'll happen there fairly soon. Mags kind of hanging in there sideways, longer term uptrend attack. Notice the slope of your 50 and notice your moving average order. So that's okay. Good to see the old leaders still pretty much being the new leaders. Major drugs trying to bottom out, like I said, with biotech. So that's a good thing. Maybe these new sectors will begin to take off. Physical platinum beginning to wake up a little bit along with gold. Qs, we talked about a minute ago on a weekly basis. They look a little ugly on a daily, but on a weekly basis, they're looking a lot better, but kind of sideways like the other indices. I like these gaps to be close. And while we're wishing for stuff, I'd like to see it make brand new highs. Sky Computing's been doing really well, just of all-time highs. I think I mentioned that a second ago. Semiconductors are pushing into this overhead supply. As I've been saying ad nauseum, when you have an overhead supply situation and the market drops below it and then it comes right back through it, two things. One, that'll test out if you actually bought it on the breakout coming out, which I don't do. But two, if he can get back through that supply quickly, then it becomes a big old do-over. But the longer it takes to get through that supply, the more significant that overhead supply or resistance, if you prefer, becomes. Okay, so just kind of write that down. Social media, all-time high, so that's certainly a good thing. Home builders, not so great. Looks like a top remains in place there, so that's kind of ugly. Telecom has made it to brand new highs, or at least poked them earlier today. So a lot of these areas, I'm hoping. I know you should never hope, but hope in one hand, and never mind. I'm hoping it'll bust past these prior highs. All these sectors that are coming up to double tops, I'm hoping they'll bust through and keep on keeping on. Energies have been improving, but they're kind of all over the place. We're long that KGS, but I did see some shorts setting up tonight in the energies. I'm not going to take them, but it is they are mixed like most everything else. Okay, I think the Facebook group has eliminated pretty much all the individual stocks because we talk about stocks there. But if anybody's not in Facebook or whatever that has a stock, or anybody in Facebook, any stocks you guys want to look at? Going once, going twice. Well, while we're in impasse, I want to thank everybody for attending tonight. I appreciate you taking time out of your busy schedule. If you want to attend these, by the way, davelandry.com/webinar, and you can sign up and go through the go to webinar, and then you could also follow my YouTube channel, which is youtube.com/Dave Landry, and you can get the live webinars there too. All right. Well, everyone here, most everyone here that's in Facebook, I'll see you guys and girls tomorrow. Everybody else have a fantastic weekend, and may the trend be with you. Thank you so much. You're welcome.